Thank you. So what I'm going to put to you today is that there really is a wave behind us with respect to sustainability. And you will see that there are 40 banks on the FTSE, and you will also see that there are 40 completely different strategies when it comes to ESG. Now, what I'm hoping to do for you today is to give you some insight in terms of how a financial institution will look at these and look at these trends and what we're seeing in the market, and hopefully provide you with some insight in terms of how you can leave here and do something that can be focused on ESG and sustainability. So, mugshot, this was my pre-COVID picture, so it's been a tough 2 years, I have to say. But I guess the most important thing about this is that I run a team in Barclays that's called the Sustainable Product Group. And what we do in that group is we focus on sustainable and green products that you can use as our clients that will help you in your ESG agenda. We are not pushing anything to you. We're not asking you to do anything in particular. What we want to do is support the narrative that you are building as a business, as an institution, even as a university. So I guess here we go. What is sustainable finance? I do have some notes that I really want to follow. Keep me on track and on time. So I'm going to throw to you, firstly, guys, this isn't new, what we're talking about here, right? And this has come out before. SDGs we've seen, right? We've had the UN Principles for Responsible Investing since 2006. SDGs 2017. So what is new now? Why are people like me standing up here and talking about this now? And I think it's really about this concept of ESG. And now G was always in our financial accounts, right? It was just in the notes of the account. Now what we're doing is we're bringing this up through CSR, etc., and now into ESG. What we're doing is we're bringing that from the bottom of our accounts into the top and making it part of our management philosophies and how we do business. And why? Because it's important, because our shareholders want to know. Our other stakeholders, our credit holders, our banks, our investors, they all want to know what we're doing and how we're making our money. And I think that the thing that I would say here is what this is providing is, in essence, the idea in this concept of ESG being an investable asset class, right? Now that starts to get really interesting, because what you can do is you can start seeing frameworks and ways that businesses and ways that investors can start putting money and putting liquidity into these areas. And now is a great time to start having these discussions. Now, this is just a little bit of a spectrum in terms of how a financier might look at sustainability or ESG, with really a continuum from traditional financing, so that is the best return for unit of risk, all the way over to impact and actually even past that, philanthropy. So we provide our capital in the form of a loan, and we're actually happy, if we're philanthropic, to have a total write-off. As you come back from there, you're in a position whereby, you know what, actually, I want to have impact with the pound that I'm delivering. And as such, I'm actually willing to adopt a sub-market return. And there you are on the impact side. Traditional, as I said, is the highest form, and if you like, the most traditional form of return. I want the best return for my unit of risk. Now, question is, when you're dealing with a bank or a financial institution, where do they sit on this spectrum, right? And what aligns to what your mission is as a company or as an institution? Because that is what is going to be one of my takeaways today, is that because everybody, all of the banks, all of the private equity firms are running a different strategy, now is exactly the right time to be discussing these things with them so that they can help you and you can help them in a synergistic fashion to get to whatever their goals may be. So I'm going to move on. So niche to mainstream. So firstly, two things you know about bank presentations. One, they've always got a lot of words on them. And then two, they're always hockey stick graphs, right? Okay, so in essence, what are we talking about here? This is, well, cue the graphs. And every discernible statistic or every benchmark that is worthwhile shows the focus on ESG going up. right? So whether it's a composition in the bottom right, or whether it's, as you'll see on this next page, an indexed return, you can see that there is appetite. Whether it's purely fundamental, i.e. from the facts and figures, that is, I would say that it is, but there are market commentators that would say that it's a supply-demand imbalance that's driving this. But then I would put it to them, this is indexed as of September 2007, right? So not long after the UN not after the responsible investing. And as we see, we're seeing the line diverge. So in essence, the dark blue line is a basket of ESG leaders in Europe, and the yellow line is in effect a similar basket of corporates that are non-ESG. So as we can see here, a divergence all the way up to the end of last year, and actually we see most of this separation happening early 2020. Now, if you remember early 2020, that's when I had that fantastic hairbrush and airbrush photo on the front, but also that's pre-COVID, right? And we are noticed that these lines are diverging even more. Now, a little bit more about the bank stuff, right? So here's the words. We've had the graphs, let's go for some words. So I'm only going to draw your attention to the top right as you look at it, stage left, the top right graph. And in essence, this is a chart around valuation and how valuation is adjusted dependent on your climate risk. Now, climate risk is a principal risk for a bank. So, in essence, when we look at the valuation of firms, right, and the valuation of a firm and then the leverage then you put in is a proxy for risk. So, in effect, as you would imagine, companies like oil and gas and power utilities infrastructure, they're actually seeing a discount versus the rest of the market. And all else being equal, as we start to put lending into these businesses, all else being equal, just by virtue, cash flows can be identical, but just by virtue of their sector, they are viewed as more risky. It kind of makes sense when you think about it, but all else being equal. And as we look at huge utilities and also integrated oil companies and things, integrated energy companies, oil companies, things of that nature, it really does seem that their cash flow, so the converse of this, is the cash flows that they're creating are in excess of their valuation. The way I interpret that is that they are the key to a sustainable future in many ways. So looking a little bit at sustainable finance now. So when I wrote these a few weeks ago, I only delivered them this week, but I wrote them a few weeks ago. And when I was putting this, I was kind of thinking, this is a little bit obvious, this stuff that I'm writing down here, right? So supply chain we've heard about before, regulation, absolutely. And I think the two key things that I want to bring your attention to are actually the two bottom bubbles. So on the right-hand side, as you look at it, so how banks are looking at this, right? So the 40 FTSE banks, right? And that is ignoring challenger banks, and that is ignoring other forms of financing. Just looking at the banks, you've got 40 different strategies. You're a unique business, or you have a unique scope of work that you're working on. Isn't it right that you should, at this moment in time, look around to see who is most aligned to your way of thinking? So I would say that there's a lot that's coming out of the banks at the moment. And then on the left-hand side, as you look at it, the net zero for investors. Now, the private equity and the venture capital market, absolutely, it's much more fluid than the banking market. But also, I would say, outside of the impact fund space, then I would also say that there's quite a lot of these businesses that are not as far advanced as some of the other financial institutions. So we're noticing a lot of those non-bank financial institutions also coming online in terms of what they are doing outside of the pure impact space. So the big private equity firms, for example, BlackRock, 3i, CVC in the direct lending space, those are all investors that are looking at their portfolios. Why? Go back full circle. Because their shareholders are asking them how they're making their money. One of my favourite slides here, namely because it's got graphs and words on it, which is definitely two things that I like. But in essence, the thing that I want you to take away from this, the last 2 years, we have seen over 300% growth in the sustainable financing market. And I think the key thing to think about is we really haven't even left our homes in that time. So as we look at these numbers, we're really at the crest of this huge wave. It hasn't broken yet. And I'm going to give you 3 things that will not equate to just a surfboard, but probably also a wetsuit for you. So wanting to get these right, because I did write them down. So we don't want to drown. We'll grab our surfboard and we'll also grab our wetsuit. And we'll think about, from a bank's perspective, what are you thinking about when engaging with your banks? So keep an eye out for their value-added content. This is definitely a market where a bank is looking to differentiate versus their competitors. And they are going to be providing, as best as they can, with good intentions, other information, webinars, they're going to do meetings, they're going to sponsor events, just so they can get their message out there. And hopefully that will resonate with the public that they're dealing with and the community in which they choose to operate. So 1, keep an eye out for their value-added content. 2, be a little bit patient. Lots of the banks are quite slow to move. However, the ones that are picking this up quickly, you will find a rate of change that is almost unrecognizable versus in the next 12 months versus the last 12 years that you would have seen in banking. We're trying to support with the right products. And thirdly, I kind of insinuated it a little bit before, actually, shop around, right? If you are doing something sustainable, you are in demand from a bank's perspective, right? Whether it meets their exact strategy and whether they can support you in the way that you want to be supported, viewing the market, that is a question. However, what I would say is that right now is exactly the right time to be having those kind of conversations. C'est tout.
Thank you, Bob.
Thank you.